Hi everyone, hope you're all having a great day. In today's video, we're going to go over the Q&A session that BlackBerry had on October 17th, 2021 at 1 p.m. Eastern Time. They had an investor briefing regarding Project Imperium in terms of update and Q&A. This is specifically for the IPO, new IPO slash splitting the IoT portion of the business, going to be subsidiary of the current holdings. And the speakers was John Chen, CEO of BlackBerry, Steve Rye, CFO of BlackBerry, and Tim Foote, VP Investor Relations of BlackBerry. I did miss the first 2 minutes. It seems like they were going over what was already publicly stated, but I'm going to personally. So this is just going to be playing the re-recording. So if you want to watch the whole entire thing, in the beginning it's a little bit of small screen. I think after 2 minutes I put it into full screen. But the main point, a more important portion of the video is the audio, so you could still hear it the whole entire time. But in the meantime, here's the replay. I'm going to re-listen to it and re-listen to the replay that's going to be posted on BlackBerry, hopefully today or tomorrow, and then post my thoughts after that. If you do find this video helpful, drop a like, it helps the channel. If you want to be notified when I do upload the next video, which will be a deep dive of the whole entire session, you could follow or subscribe, either or, to be notified when I do upload that video. But right now we're going to watch it, and hopefully it answers all your questions. If not, you could always email investor relations to find out further information on what you're questioning for this company. So yeah, let's get
in a medium term, not even in a long term, in a medium and a long term is better for the shareholder in terms of the share prices. So that's kind of the backdrop of it. It worked very hard on it. I myself worked quite hard on it, and we have a program office that does that. And where we are today, we are already, Steve and team already started to separate the financials of the two organizations. We will need to have the auditors to audit the financials back in a couple of years. We have people working on drafting the S1, for example. And I hope, according to the bankers, that I think you folks probably know this a little better than I do, it takes about 9 months on a compressed process in order to get to the IPO. So that put us in about the June timeframe next year. I hope to avoid the summer if I could. So hopefully we'll get it by June. If not, then September. September, it's a bad month for the stock market. I mean, usually when people come back from holidays, they have a different set of minds, so therefore market conditions allowed, but we're pushing June. Anything more that you folks want to add? Any questions? Maybe it's best for me to answer what you wanted to talk about rather than me going through what we do every day.
Yeah. So Dan, first question.
Hey, John, thanks for doing this. You talked about many investors owning BlackBerry because of QNX. So can you talk about how you weighed the decision to IPO a piece of that business unit rather than give shares to the existing shareholders?
Yeah. First of all, I think the shareholder in the markets would tell us after we IPO'd it, and depending on the value, and also depending on the status of the cyber, and also depending on the reality of the convergence of the market. So I think you should look at it as not a promise, but as a first step. And I would be the first to tell you I wouldn't say no for no sake. But today, it seems to make sense for us to preserve our strategy of convergence, which you heard hopefully this morning, that we align with people like Siemens and McKinsey and Amazon and GE and other people that too many of them to be able to bring on the stage. So this convergence market is very real, and there are very few companies that have both technology in terms of playing in the IoT world in a very deep embedded area, world, as well as playing in the cybersecurity world. Now, let's talk a little bit about cybersecurity. I think one thing, the thing that's bad for us is that we haven't been able to grow it. As you all know, it's our intention to continue to push for growing it. The good things for us is our cybersecurity is really a much broad base, not like a product like CrowdStrike's or a product like SentinelOne. We have 4 components on the cybersecurity. We have the endpoint management, which we're bringing to the edge. We have endpoint security, which you all know about Cylance, using the AI technology and for threat hunting and prevention, and the managed service behind it. Okay, we have ad hoc, which 70% of the United States government employee uses this as emergency crisis management software. It's now integrated with the UEM as well, the UES. And we have secure voice and text, soon to be secure browsing and file management. So we have all these technologies that provide an environment where endpoints talk to each other. So maybe the whole word cybersecurity has shortchanged us a little bit. But at the end of the day, we need to make money and we need to grow the business. So we're working hard on it. We want to make a priority of making money first now.
Okay, next question, Paul, here in the front.
Thanks for doing this. Just on your point about preserve the strategy of convergence, how do you intend to do that with the split of the company? Like, will you still have control? We only float a portion of it. Like, how do you maintain the collaboration between the 2 units if they're split?
Well, hoping that the 2 operating unit will have an alignment in terms of the product roadmap, as well as the strategy. Now, that's not when you have 2 boards, 2 management team, that may or may not happen. But if that's not the case, I thought that through, maybe it's a little naive, but that means that so first of all, I believe the convergence is unavoidable, okay, that in the market, it's not avoidable. So therefore, whether IoT is standalone or otherwise, okay, they will have to work on some form of cyber security products and portfolio. Usually it's through a partners. So that put both of our business in a more Switzerland mode. For example, cyber people obviously could put Cylance on QNX, but we could also put Cylance on Linux. We could also put Cylance on other operating systems. So that also will maybe open up the aperture of potentials. So I think the more important thing that as we, Steve and I and talk about is that both operating unit needs to be financially viable and standalone. That's the number 1 goal that we have. With that, we have plenty of opportunities and plenty of possibility. Without that, of course, it's a different point of view, different situation altogether.
Question online, if I may, and John or Steve. This is a really kind of basic point, but a lot of BlackBerry shareholders want to know that following this IPO, do they end up with shares in both companies or just in one? So just a very practical point, just to explain what this is for those less familiar with the process.
Sure, I'll address that. So, on the sale by the company of a portion of the IoT business, hence the sub-IPO, that portion that is sold, obviously those will be shares of IoT, discrete. The proceeds generated from that portion that's sold come into the existing BlackBerry consolidated, and then we'll decide, depending on the amounts raised, what to do with that.
Okay, got it. Oh, Todd.
Hi, excuse me, Todd Copeland from CIBC. Nice to see you guys. John, what's the sequence of your plans now with your contract coming up and this project now on a path to split the company?
The true answer is I don't know. And the reason I don't know is because, like you said, it was very important for me not to touch that point before we made a decision. The board is able to make a decision. Now that the board made a decision, it's now time for me and the board to sit together and say, what value would I add, or had I ever add any value, but what value I add going forward. So it will be soon. Well, the good news is, I think, none of us, the board or myself, have any desire to rush to anything. I'm not, running out here, nor the board wants me to go. So there's a conversation there, and we'll probably have to resolve that soon.
And if I could follow up on cyber, it seems like the asset sale path interest was somewhat limited, or the interest was unacceptable and it needs to improve its financial performance before you can realize value. So how should we think about possible sale of cyber? It seems like it's at least delayed for a while, and maybe comes back on the table, but just talk about how we should think about that.
Okay, that's a good question. Good question. So as a public company, any piece of assets at any time, including the entire company, it's open up for any strategic actions. It's a matter of a price that is the board determined that is worth risk adjusted, worth the return to the shareholders. So, we as a public company officers, that's the first and foremost. I mean, I'd be stupid to tell you that, oh no, there's never, we will never sell it. I mean, it's not an emotional game, it's a mathematical game. All right, so that's number one. Number two, you're absolutely right. Today's cyber is not growing and is losing money. Until we turn that around, we should never expect a valuation that is not being lowball or bottom fish. So we are the best person to turn it around. So I think for the shareholders, rather than sell it at a low and bottom price, you would want the management to say, fix it, then it has certain values. And maybe at that time, it's not worth selling because it's growing and making money and generating cash. So it's really a matter of determining who fixed it, or you just want to get rid of it. And so we cannot just get rid of it. Here's the reason why. Our customers are who's in the government around the world. Our customers are who's in the banks around the world. It is a disaster for many for us to walk away, even if it's walk-awayable. So it's best for us to fix it for the reputational, for the business itself, and for the value of the future.
Question then, Paul? One sec, you need the microphone.
Will IoT stakeholders be offered any ownership interest in the IoT division, either before the IPO or at the IPO?
The IoT stakeholders.
Meaning OEMs, tier ones, partners, et cetera. Like compare it to like the ARM IPO.
Yeah.
Something along those lines. I think it would be an opportunity for your stakeholders.
Yeah. A very good question. I don't know the answer to your question, and here's why. One of the value of QNX and Ivy is the Switzerland nature. We work with, for example, the chips company. NVIDIA pushes us, Qualcomm pushes us, TI, Broadcom, and so forth. If it would take a lot of money on that valuation, I'll make it up. It's one of those people invested in the stakeholders invested in the company. Will that turn people off, turn the other chip company off? So that's question number one. And similarly, an OEM is the same way. And so our power is that we work with every auto company. And if one of them own a partnership, own a percentage of QNX or IoT, would that prevent others from using it? So we don't know the answer. From a banking point of view, that's the highest value because it anchor the dollars on the the value of the IPO. I got that from a mathematical point of view, but I need to worry about the strategic implication to the business.
John, following on from that question online, what proportion or what portion of the IoT business are you considering actually selling? And would you be open to through the IPO? So would it be 10%, up to 50%, or would you even consider a full spin of the IoT business?
As I said earlier, I think Dan asked the question. So so initially we're talking more like a 20-30%, like an Intel Mobile I type model. But as the market responds, I wouldn't be standing here and tell you that there's no way that it cannot be spinned. Does that make sense?
Yeah.
Right. But that's not our initial plan. Our initial plan is the Intel Mobile I model.
Understood.
Todd Copeland from CIBC again. I had a financial question. So I guess there's pro forma cash if you pay the debenture back of roughly 150 million, I think is what you called out on the last quarter. If you think about the current burn rate, some investors have projected that out and not projected improvement in the business. And then they're saying, well, it's more or less a year of cash. Could you just talk about your thoughts on the balance sheet, whether that's the right way to think about the cash position, the burn rate, et cetera? Thanks a lot.
I'll take that. So, I think projecting out at the current burn rate and level of OpEx, on the back of some of the comments that John made, particularly with respect to cyber, doesn't make sense. So, we're working on the profile of that P&L. And part of this comes from the fact that, we've been very clear, the last few years have been heavy from an investment standpoint in terms of getting the product, up to the state where it needed to be competitively, which we believe is in a great position now. So we've been over-invested, and that never was, contemplated to be a long-term strategy. It was to get it to a stage, and we should be able to back off from that, to come in line more with just, high-level benchmarks for investment.
Yep. Dan?
John, you talked about restructuring the cybersecurity business to get it back to growth and profitability. Any thoughts on potential asset sales to help you get to that goal faster?
Not being discussed today. We have a plan that we work with John Giamatteo on the cyber unit to greatly reduce the loss in a short period of time. And just like Steve mentioned earlier, a lot of them has to be focusing on streamlining more R&D activities, which we needed when we integrate Cylance into the UEM family. So now that's behind us, we're done with that, something that we need to address. So that should reduce a lot of the cash use, and in a short period of time. So, but I haven't contemplated on asset sales. However, we do have some ability to monetize the remaining part, which nobody ever talk about, which is our IP. So there are some opportunities over there, and that's being explored right now.
Okay. Further question, clarification. I know you touched on this already, John, but just they're asking, when will we see standalone financials for the first time. Maybe it's a question for you, Steve.
Yeah, so that would be, typically not like, John mentioned the separate financial statements, the carve-out financial statements for IoT need to be audited. The historical periods need to be audited. So this is all kind of information that would end up in the S1 filing.
Okay.
So it should be what, S1 should be somewhere around March timeframe?
Yeah, mid next year, which is kind of what we've said.
Okay. Yep, Paul?
How do we think about the high level financial profitability of both segments? Like, can you give any indication on, like, is QNX profitable? Yeah, how profitable? And conversely, like, how unprofitable is cyber? Just ballpark.
I don't think we split that.
No.
Or like, I mean, maybe more bluntly, is QNX profitable?
QNX is profitable. IoT is profitable as a whole. Yeah.
Any further questions? Tom?
Take your valuable time here. We appreciate it.
Sure.
On QNX, you talked about how some of the programs have been delayed for automotive reasons from a secular perspective, et cetera, their own design cycle. We see this extended strike in the market now. Different production is here and there from the automakers. Talk about the impact of the strike if that gets extended, and what does that do in the context of your current view on IoT rebounding second half of the year? Thanks.
It has an impact. We know the numbers, and it will put a dent to the rebound, but we still believe it or not, we still believe in Q4 we'll have one of the highest, well, not one of the, but the highest revenue quarter, like we point out at the earnings call, even with the extended impact of this. But I don't think it's going to last that long.
Okay, so last call for any questions. Yep, Jeff?
Thanks, Tim. What enhanced disclosure would we expect on QNX?
Is that prior to the S1?
No, I would say potentially prior.
Right.
But I would suspect you need much more disclosure to help get a better evaluation for QNX. It's not ARPU or REM or OEM, but it's how many domains you're on, what's in the pipeline of wins, composition of that, so people potentially could understand how you're growing in various different domains. So how do you frame the type of disclosure you think you'll have to have?
Yeah, I imagine, I mean, from what I'm working on, I imagine all that's going to come on the S1. So I don't think we will make selective disclosure as we move along between now and then. We are working hard on creating the S1. In fact, the bankers are writing it, and the bankers are writing it. That's how they get fees, right? So we will be able to disclose competition, a little bit more detail on the backlog, and the market share. And the drivers, by the way, I think I wanted to focus on, why would a business grow under normal time? UAW strikes and stuff, all aside, supply chain, a lot of all the aside. What are the major drivers that we feel good about? And then you heard this morning about Ivy. AWS and Amazon is treating it really, really seriously. So there's a lot of opportunity there, and you'll see more and more releases on people joining the proof of concepts, and hopefully some of those turn into wins, and some of those proof of concept people are pretty big, like Mitsubishi, for example.
John, is the expectation that by spinning QNX out, that you can actually accelerate the growth there, just given that it is cash flow positive? So now they've got a lot more funds that they could reinvest into themselves rather than try to help restructure cybersecurity. So should investors expect that carve-out to help with the QNX growth story?
Yeah. You should expect that. I think, we all make a determination that cyber has to stand alone by itself. It cannot be subsidized. The last couple of years, we subsidized it, prior to that, using IP income. And we talk about how we have to put the money in so to catch up the technology. We got it. We integrated it. We did what we said we're going to do. So IP will come later in terms of the income to the company, but it cannot be subsidized by IoT. No, it's not our intent at all.
Yep, Patrick.
Thinking about the capital structure of the two businesses and what they can support in terms of debt capacity or how much cash they need, could you just provide some insights about what the standalone QNX could support versus what kind of a consolidated parent would need going forward?
I won't answer specifically on that right now, but obviously, related to the prior discussion, getting cyber to a profitable state, both businesses should have, coupled with the existing resources that we've got, both businesses should have adequate resources to fully fund the planned activities and expected growth.
So follow-on question from that. What is the time frame do you envisage for cyber becoming profitable?
Well, we are taking some action in the next couple of quarters, this and next. So I'm hoping that we have a business model or business plan that allow us for the next fiscal year to be profitable, or at least break even. It should be short term. We're not looking at this as a long-term situation.
Sure. Okay. Any further questions in the room? Okay. Well, hopefully.
By the way, I have a question. So you folks listened to this morning. We put a lot of work in this morning, inviting the proper keynotes, and does that make sense, or is it worth your while? Okay, good. I see the nodding. Okay. Convergence is slightly early, but it's very real, and you got major corporations around the world that share the same opinion, the same directions. In fact, Siemens it's all in on that, because they need to build transportation systems and power plants and stuff that are network enabled, IoT and internet enabled, and they need to have a level of trust. So that's what they're looking for. So McKinsey prove it out. Amazon think the same way, and so it's a lot of the different ones. So this is one of the reasons why I'm such a believer in that. We're a little early. It's unfortunate that we weren't able to grow our cyber business. If we had grown our cyber business in the last 2-3 years, we're in a completely different posture today. So, but the past is the past. We will make it right.
Excellent.
Okay. Thank you all very much, and hopefully have a good day here.
Thank you.
Thanks.